This is a report that many banks actually look forward to. Of course, it's not an opinion expressed by the firm that carried out the survey. According to them, they just to get a perception or an idea of how satisfied bank customers are. Talking about across various sectors, from SME and the big corporates and regular people who go to the bank. Now, since 2009, since the banking reforms, we do know that banks, of course, corporate governance has improved, risk management has improved, but the survey seems to suggest that that is what banks still focus on. And that brings us to the question, of course, why are these banks in business? We know they're in business to make money, but who is the number one priority? The customers. But in terms of customer satisfaction, that doesn't seem to be the first, let me say, first four in terms of priority. Well, they would say that, but looking at the numbers, it doesn't look like a customer satisfaction is still being brought to the fore. What are your thoughts on the report?
Well, let me start by saying, if you take it that the industry has gone through substantial reform and transformation in the last 2 to 3 years, you will understand that customer satisfaction are things that will be pursued by banks as a major strategy for getting market share. But on the other hand, what are the customers looking for? Since the Sanusi banking reform, customers are not going to bother about customer satisfaction in the first instance. Their concern will be flight to safety, the safety of their funds, the relative stability of those banks, and their liquidity status based on what the CBN report has said. And so there was general fear in the market. And you see, when these things happen, it's like everybody must fly to safety. And if you look at the survey, the report of the survey, you will realize that a lot of the banks that have emerged as preferred banks for these customers are those banks that have been perceived to be very stable. And particularly, they are those ones that crossed the CBN order, that were not harassed by CBN at all.
Report, okay.
So the trend is consistent with what has happened in the banking system in the last 2-3 years. And I guess that there's a lot more to a banking system and banks than just customer satisfaction. Yeah, customer satisfaction is the most important because of all the stakeholders, it is only the customer that brings money. Every other person takes money, like the government, the employees, the directors, the shareholders, and the rest of them. But the customer brings money. So customer is number one. But going forward, I believe we are going to see more of customer satisfaction being a major factor in how people will prefer banks to deal with and banks to bank with, particularly now that we are going electronic.
But with this report, would you say that the banks are aware of how, in terms of communication with their customers, do you think that that's the interface between the banks and the customers in terms of perhaps asking them how satisfied they are with their services, general relationship? Do you think that's strong enough? Because this report, like I mentioned earlier, still shows that in terms of customer satisfaction, that is still quite low.
Yeah, but the content of people or the composition of people who go to banks are not. It's not very significant. Let me put it this way. It's not very significant in the first instance. In the second instance, you realize that even the banks themselves, they know that you don't have plenty banks like you have elsewhere, like in the Europe or some American countries. So you find a situation where the customer survey of banks used to be important those days and used to be very intensive, but now you have not entered the bank and I see people give me forms to fill and say, what do you feel about our services, and all that. Maybe I see that in GT banks and maybe 1 or 2 other banks. But it doesn't appear as if it's the focus recently. It does not appear so. What we see is that they're just interested in providing the service and not interested enough in knowing what the feedback from those services are. And that is what matters. It is what the customer thinks.
But they're making money. So I guess perhaps, we've seen their earnings reports from last year, full year, and first quarter, and even second quarter of this year. So perhaps, they're making money. They're making even more money now.
But how sustainable is it? You can make money now because of the kind of environment we operate at this time. And they are making money not because they are particularly, responsive to their customers, but they are making money because the macroeconomic variables that we operate at this moment puts them in a position to make money, whether they satisfy customer, whether they lend, or whether they do any other thing that ordinarily banks should do. You can make money now by just putting a lot of your money in treasury bills and government bonds, and you are making 16%. That's a lot of money. Those are not coming from customers. So that's why we're saying customer service might not be a major revenue and customer loyalty driver at this time. But mind you, as we move on, and people are used to the stability of these banks, and a lot of them can build capacity, it is the electronic platform that will determine what will happen to customer service as we move in the next 1, 2, 3, 4, 5 years. The truth of the matter is, I've seen a summary of the survey, and I've seen that even bank customers now, only about 7% of them use internet banking.
Well, you're talking about, okay, we might as well go straight into the,
and the figures are quite disturbing, really.
If you have just 7% of respondents saying that they use, just 7% of them use internet banking, what does that say about, because I know the banks have made very, very heavy investments into the e-banking and electronic channels. Of course, with all the competition that we're seeing, it has become a must. And that's defining the change in the industry. But just 7% of them use internet banking.
Yeah, 7% of them use internet banking. What that goes to show is that they've not really embraced that electronic platform for service delivery. They have not. And a lot of banks are, they put adverts in the papers, switch to electronics and the stuff like that. But the truth of the matter is, the survey has, characterized banks, customer of banks into 3 areas, 3 major components: corporate, SMEs, and retail. For the retail people, I believe that you will need much more than advertising in the papers to get them to embrace electronic banking system, like the POSs and internet banking. But for the corporates and the SME, probably they would do that. But in terms of numbers, they are not plenty. The real mass is in the retail, and it's when you can get all those on the electronic platform. That's when we'll say we're making progress with regards to electronic forms of payment. But clearly, the figures are very worrisome.
Are they?
About 97% of customers still prefer to go to their banks to do banking transaction. I think that's a big problem for the cash light or cashless,
Well, do you think it's perhaps, it's perhaps we're still, in early days, it's still some teething problems, and we should give it time. Perhaps we would see, more people embracing it. Is it too early to tell, or do you think that by now we ought to have, done better than we looking at the numbers?
No. Either way, whether people embrace it now or they don't embrace it, will not stop that transition. That is clear. The electronic banking system has come to stay. It will continue to get institutionalized, and people will be forced to embrace it one way or the other. But that's not even my worry. My worry is that we must begin to educate the people, because if you don't educate them enough and they are having challenges doing transactions on the electronic platform, it is possible that they might come back to cash, and then you begin to see a lot of cash, moving transactions in the economy. That would be a complete defeat of the entire process that's being put in place. So it is the transaction intensity area that we should focus on now, not the volume intensity, because almost like 100 big corporates can do the transactions that almost like 5-10 million people will do in a day. That is it. But we should not look at the volume of funds and transactions. We should look at the velocity of the transactions. How many of these retail people are we putting on the platform?
Okay, now let's still look into the report. The Customer Satisfaction Index, as a CSI used by KPMG, now rates the bank. To rate the banks is composed of five key factors, as convenience, product, service, and offerings, transaction methods and systems, pricing, and customer service. Now let's look at the numbers. Now 4 banks stood out, in terms of the best performers. Let me call them that. We have Guaranty Trust Bank coming tops for the retail. That's classified into retail, SME, and corporates. What they felt, when the respondents, 77.9% for GTB, that's from the retail customers, 97.1% for the SME, and 72.5% from the corporates. We have Zenith, Stanbic, and Diamond, all in the 70% region. Now, are you surprised at this? Make this list, in order of which they've come? That's GT, Zenith, Stanbic, and Diamond Bank.
I'm not too surprised, really. I think what I see in this instance is that a lot of these banks that have embraced this electronic platform, even before it became a CBN-compelled strategy, they are the ones that have been able to build mass and capacity. And that is why GTB is on top. Mind you, the GTB that is becoming number one now used to have plenty challenges in managing retail customers in about a year or two ago. And it was so bad that people would queue from the bank, from the inside of the branch of the bank, to the main road. So it was clear that people preferred the bank, but they were having challenges in managing retail customers because their focus was never retail from the beginning. But then when they switched to the retail platform, after about a year, they were able to use, IT platform to solve a lot of the retail issues. And that is very brilliant.
You said that they switched. They switched or they were forced to switch.
They were not forced to switch. I think it was a deliberate strategy.
During the banking sector crisis then, of course, we do know that many people moved to the perceived stronger banks, and this bank was one of them. So, of course, whether or not they were ready, they had to take on more customers.
Correct.
So you're saying that they weren't ready? Or
No, they had the option. I mean, GTB, I would not say it was the banking sector crisis and reform that forced them to take that strategy. No, the truth of the matter is at the time they came to the retail market and say, you can open an account without any deposit. That means you can open an account with 0 kobo. And they were able to implement that strategy. By the time you say people can open an account without any deposit, people are going to flood into your branches. And they had that challenge. How prepared they were at that time, I don't know. But the fact that they were able to manage that transition and put a lot of people on the electronic platform, I think that helped a lot. But my major surprise on this rating has been, some other banks that you would have thought would be within the first, 3, 4, 5 position. And they are not. If you look at a bank like Access Bank, very aggressive bank in terms of wanting to take market share, wanting to make sure that they satisfy their customers. Access Bank is a big surprise to me. And First Bank particularly is a big surprise to me. You know why? Because First Bank in the last 15 years has been implementing a lot of reform processes in a very structured and gradual manner, as opposed to other big banks of its size. And that process has been replacing the old people with a lot of young people, replacing manually driven processes with a lot of electronically driven processes. And I believe they have come to a point where a lot of people are embracing their services. But that means they are not getting back to their customers to know how satisfied they are with these services. Because if they were, they would have been the first to correct a lot of these things before an external party like KPMG goes out to the customer to ask the same questions. And then that's what we are seeing in the public now. It's not good for the image of First Bank, being the number one bank in this Nigeria in terms of history and size and the stuff like that. But I'm particularly concerned about Access Bank and to some extent EcoBank.
Okay, we'll hold your thoughts first, Wale. We need to take a break now. We'll come back to look at more of that. Of course, we're looking at customer service delivery in banks. We're focusing on the KPMG report on the level of customer satisfaction among some respondents that they interviewed, talking from the retail, the SMEs, and the big corporations on how satisfied they are with their banks. We'll take a short break now. We'll be right back. Welcome back. Well, how satisfied are you with the banking services? That's, of course, you're talking about your relationship with the bank that you bank with. Are you satisfied? Now, of course, we do know, we're familiar with the phrase "customer is king." But how much of that is true, Wale, for many of these banks? I know you've been in the banking industry for several years. You might have some favorites. So that let's not go into that. You might want to be biased in mentioning names, but do you going? Right now, in present reality, would you say that banks are living up to that? The customer is king for them?
You see, the customer will be king when you know that good service to the customer is what will sustain you in terms of profitability, in terms of brand enhancement, and in terms of other variables that can make people to say, yeah, this bank is number one. As it is now, the saying is correct. The customer is king. That is clear. But what is not clear yet is that, is the industry in a position today to make the customer king? And if you compare the banking sector to the telecom sector, you see that in the telecom sector, the notion that the customer is king is much more, prevalent than in the banking sector. And that is why you see a lot
perhaps
of...
there's more because there's more contact, because we make regular phone calls.
There is more competition. It's because there is more competition. And in the telecom sector, you don't have easy way to make money except to provide service before you can make money. In the banking sector, you can get away with that for the time being, because as the macroeconomic variables are being adjusted, interest rate goes up, and who benefits? It's the banks. So if the banks can make money easily, why go through the whole org of doing extensive customer service just to make the same money? But like I said, is it sustainable? It's not sustainable. Customer is king. Banks will begin to realize that when we get to that point. That's the point of marginality, where your marginal cost is almost equal to your marginal revenue. And that's where profit is zero. That is when competition will drive who gets what in the market. And when competition does that, all the banks will have to go back, go inward, and work on their cost, because you will now be able to compete on the base of cost and also on the base of customer service. But now, I think what is happening is that there is economic rent. You get money for putting not so much.
Now, looking at this report, how would you expect these banks to, or at least for those of them who are at the, shall I use the phrase, bottom of the food chain, what would you recommend that they do in terms of balancing? Of course, we know they have to make money. That's also key. But of course, who are they making the money off? At the end of the day, it's the customers. Yeah,
absolutely. Well, I think what they should do, in my opinion, is that, one, what this report has done, which is the survey carried out by KPMG, they should go back and do exactly the same thing. You see, the system is changing. Gone are those days where you sit down in your offices and you prepare products, you structure products, and you take it to the customers to buy. It should be the other way around now. You go to the customers, you ask them what they want, what their buyer values are, what their buyer needs are, and then you put together a value proposition that you can take to them that will be attractive. So you are giving them what they have appetite for, not you sitting down in your office and structuring products and then just pushing it to them. That is not going to work. So an external party has done this survey, I'm sure, at their expense. We must commend them. But the banks themselves must now begin to be proactive and do this survey and get the feedback from the customer so that they can respond to it and begin to, now change their services and their approach to managing their customers. That is my recommendation. The second recommendation is that if you look at the report said people have not really, apart from the ATM machines that got 82%, people who prefer to go to the banks to do their transaction physically, they account for 97% in the survey. And then ATMs got 82%. But there's no other electronic platform that got up to 10%. And that is a problem. Now, why is this so? Customers said it's because of lack of awareness or insufficient understanding of the different products.
So with all the radio jingles, all the TV commercials that we've had, none of them...
They will have the impact. But we've segmented the market into three now. Based on this survey, we've segmented retail, SMEs, and corporates. Now, for the retail, it is only the CBN I've seen, going to the retail markets and talking to them and encouraging them to embrace all these electronic payment platforms. The truth of the matter is the banks themselves must start going to those places, working through trade groups, going to traders unions and all these associations. And these are the ways where they can get these people to embrace it. Going to universities, going to schools, going to employers, going to pension managers and the rest of them. And they can begin to link a lot of these electronic products to a lot of these sectors. And people can see the benefits and the value proposition, and they can embrace it. Embracing the electronic platform is not difficult for the Nigerian banking customers.
So some people might argue that is infrastructure there to
but
support
look at
it.
ATMs. Look at the way it's been embraced. They are also concerned about the security of this electronic payment platform. ATM is easy for them. They go to the machine, they put their cash, they collect cash. Nigerians still like to see their cash. But when you say the cash is moving in a virtual manner and they can't see it, they don't know, can I jack it midway? So these are the things we need to let people know, that the security system for a lot of these electronic payment platforms are seamless and very secure. And I think that is the way to go for the banks. But every bank must continue to take this report seriously, and that must be the focus of a sustainable strategy that will be the basis for competition in the industry.
Now, in terms of their general operations, do you think the banks, do you think they have relaxed since the 2009, the big stake that was wielded in that sector by the CBN? Do you think they've relaxed? Because we know that, of course, there was so much attention being paid on risk management and good corporate governance. Are they operating freely? Have they relaxed and said, okay, let's focus on this and, away from, whilst they, of course, still attending to risk management and good corporate governance?
I don't think banks can relax. They're always under pressure. They always want to compete. They always want to have good market share. Because apart from the telecom sector, I think the banking sector is one of the very competitive. Everybody is fighting for business. Everybody is struggling to get market share. I don't believe they have relaxed. But there's a tendency for banks to be a little complacent, maybe just for a few periods. You see,
especially when you're one with, that you have, tons and tons of customers. You've been able to get customers from, from the banking reform, as it were. And I walk into some of these banks, some of them that I know, were able to get more customers as a result of the banking sector reforms, and the queues are still long. There are some of them, made the top 3, top 4. You go there, the queues are still long because of perception now. Everybody thinks that these are the ones that survived, the CBN's big whip then. Some of them still seem, overwhelmed by the crowds. As like we said, it's being reflected here, 97%, only 2% use the mobile payments. People still prefer to go to the over-the-counter for the transactions.
Let's put it this way. Almost like 80% of all the transactions you can do today by cash, you can do it by electronic payment platform. That's the truth. Moving money from one bank to the other, moving money from customers to customer and the rest of them. You can do them through the electronic payment platform. That is a fact. But people have not really embraced it. That's the challenge. And you see, banks have a tendency, when there is a floodgate of opportunities that can put banks in a position to make money easily, they will maximize it. Because why? They are rational economic agents in the market, and they're always looking for opportunities. So when they need to work very hard to make the money, they'll do it. But if you also open an opportunity for them where they can make money easily, they'll maximize it. And you can see what happened in the capital market. You can see what happened in the oil trading market. And, even now in the bond market and the treasury market,
we know they're still
all of them are just
16, 14%.
Yeah, all of them are just moving funds there. I mean, it's a smart thing to do. We cannot blame the banks for that. But we will blame the regulation and the system that puts the industry in a position to move in that direction. Because a lot of these policies are supposed to use them to move institutions and the industry in a particular direction that is desirable for the economy. And that is the challenge we are having. I think for the report, what has come out is that people are more concerned about stability now than the service they are getting from their banks. They are concerned about safety. And they are resisting all these electronic payment platforms because of concerns for security and lack of understanding. People are not talking to them enough, and it is newspapers that are talking to them. People don't believe newspapers 100%. When you
But
advertise,
all these banks, they have websites, and I want to believe they have, perhaps like a section called frequently asked questions. I know, attending to customers' complaints or whatever questions. So can an average customer just go to the website of a bank and get the required information? Or at least for those who are literate and those who
those are sophisticated customers. I mean, Yoruba people will say "Ojulorowa." They want to see you face to face and trust you and ask you questions. They don't want you to be talking to the computer. I can do that. I'm an enlightened person. What about the man who is on the street, the Okada man?
So that's something the banks definitely need to work on.
CBN is doing it, but I think the banks should complement that effort by also doing their own. And CBN also should have a way of encouraging the banks, either by way of moral suasion or by way of incentives, because this cashless policy is being driven substantially by the Central Bank of
That's
Nigeria.
why I asked you that question earlier. If the banks have, when I said relaxed, as in free to express themselves, as it were, free to go about things they would ordinarily do without being afraid that the central bank will come in with a big stick and just set everybody
providing
straight.
customer service will not in any way offend the central bank activities or policies. We're talking about complementarity now. They want to complement what the CBN is doing, because no matter what the CBN does today, the banks are still the major beneficiaries of it. When they go cashless, it saves the banks money. It saves them all the massive infrastructure that they have put in place, just counting cash, and they're not making any money from those activities. So it is good for the industry, but we are saying the people who are the ultimate beneficiaries, apart from the customers, are the banks. And they should put more money, more attention, more infrastructure, more campaigns and advocacy in a way that, people will continue to embrace these systems.
Okay.
There is improvement, in fairness. I mean, it used to be 0 at a point. We are now talking about 7%, 6%, 5%. That's not the challenge. The challenge is to move from 5% to like 50% very, very quickly, and then ramp up to probably 70, 80% as we move on.
Okay, finally, Wale, let me ask you, are you satisfied with your bank? Or the bank you bank with? Let's talk about your relationship with the bank that you bank with. Are you satisfied?
Partially satisfied.
You're partially satisfied?
Yes.
In terms of... So what would you have them do better?
What I will have them do better is their electronic payment system. They need to focus more on it. I don't like to go to the banking hall, but I find myself going to the banking hall because sometimes when you are online, you don't get these things done. It takes time, system is down, and all those kind of stuff. I also like my bank to be more proactive in trying to know my needs and trying to put structures in place that can address those needs. Those are key. But clearly, I have more than one bank. So
obviously,
I have one that I prefer to the other, and that has been based on service delivery, basically. Consistency in service delivery. And when that continues to happen, I mean, clearly, you want to stay with that bank that can give you service as a retail customer.
Okay, thank you so much. We need to leave it there. Thank you so much for being a part of today's edition of Business Morning. Of course, we do hope to see you sometime soon. I have been talking to Wale Oluwo. He's a CEO investment banking at BGL Group, and we have been looking at the KPMG banking survey report, of course, looking at the level of customer satisfaction across different sectors, retail customers, large corporates, and of course the small and medium enterprises. That's what we have been looking at today. We're just a few minutes to the hour of 11. Let's quickly take one earnings report from our earnings board reported last week. That was from Mobile from the petroleum marketing segment of the market. According to the company, revenue came in 22.1% higher from 2011 at 17.7 billion naira from 14.5 billion naira. Profit before tax, however, fell 57.2% to 463.6 million from a little over 1 billion naira. We also saw that's for the profit after tax. Net assets, however, were up 7.3% at 6.8 billion naira. Well, that's about all we can take on today's edition of Business Morning. Thank you so much for being a part of it. Channel's news track is at the top of the hour. I'm Esther Obodaga. Bye for now.